All right. Welcome to the High Performance Trader Live webinar. I'm Joshua Salvetti, and today is where we take time to go over the week and how well our edge performed. Okay? So this is the first week going into May, and it was a phenomenal, absolute smoke show of a week. Our edge literally presented itself every single day this week, multiple times on multiple days. So I'm actually really excited for this webinar. It was an absolute amazing week, right? And every week we talk about the same thing. And I just kind of want to open up and kind of explain the importance of execution. So if you're a day trader, you have three jobs. Number one is identify opportunity, okay? You need a consistent way to identify a profitable and higher probable opportunity. That's number one. Number two is you need to execute on this understanding, right? You need to be able to execute when you see your edge, right? Like once your edge presents itself, if you don't execute, your knowledge and understanding means nothing, okay? So you need a way to execute on your approach. Number three is manage capital, right? You need to be able to manage your losses as well as your winners, okay? This is very important. And until you get all three, your consistency will not be present. So we're going to dive right into Monday. Monday, I took two trades. First trade, you'll notice here, we have open print. Price rallies up, comes down. A bit choppy. So initially, I'm looking for open print, moving average cross, and then this green bar to possibly be ignored. Well, we didn't get that. Instead, we got this red bar ignored, so I took a long play. Okay, my first trade was a long. Market looked like this. Once this green candle wiped out the top of this red candle, at that point, I was willing to put risk on the table. So I entered long, targeting high of day, and I didn't get it. I got stomped out in the next candle, right? Once this candle wiped the bottom of that candle, I washed my hands of the trade. I'm done, okay? This was the one losing trade we took all week. This is also why it's so important. It's so important to be able to manage your losses appropriately. Because if you can't, then you can't capitalize on the next trade, okay? So that was our first trade. It was a loss. Our second trade, which was a phenomenal sell-off right here, was an absolute smoke show, okay? Now, do I look back on the first trade and go, oh, I should have never took that? Absolutely not. I don't care. My edge was present. Yeah, it was choppy. Yeah, it was below open print. You can look at it however you'd like. The way I look at it is my edge presented and my execution was flawless. My ability to manage loss, flawless. Therefore, that was a win. And it set me up to understand that there was weak buying above open print, right? Weak buying. So now I need to identify the bearish criteria to the downside. Hold on one second. Can everybody mute their mics? Just do me that favor. I need mute. All right, thank you. Okay, so once again, took that loss, took it right on the chin, but managed the loss properly, executed flawlessly. Okay, on to the next. So then price messes around for a little bit. It was extremely choppy. Let's see here for the first 2.5 hour and a half. So now price comes down, falls below the open, falls below previous day high, falls below end of day. We get the green bar ignored. We hop in short and capitalize on this beautiful, beautiful move to the downside, right? So Monday was a phenomenal, a breakdown of our three jobs as a day trader, right? Number one, identify opportunity. Number two, execute on your understanding of the edge. And number three is manage your losses and manage your winners, right? We took that first L, executed flawlessly, managed the loss. Took the second win, executed flawlessly, right? Did we hesitate on the short entry here? Absolutely not. Once the edge showed up, and I loved it because Blue actually got in this before I did because I was a little late coming back to the chart. So watching Blue execute this, I'm like, bro, look, this is what we do. This is our edge. It does not matter what happened earlier in the day. I know it's choppy. You could do two things. You could tag the whole day as being chop, or you can execute again when you see your edge present, and that's exactly what we did. It was a beautiful trade right there. So that was Monday. Tuesday was another really cool, really good day. Took 2 trades Tuesday. 2 very simple trades. They were actually the exact same trade. Now, one thing I want to point out here is end of day is this gray dotted line. This is previous day open print right here. So I'll just throw a little line around it so we could see it. Now, once again, what's our job? Identify opportunity. What's our second job? Execute it. Okay. So we need to identify opportunity. We're getting a lot of selling in pre-market. I think there was some fundamental news catalyst. Honestly, it doesn't really matter to me. What matters is if and when my edge presents itself. When it presents itself, we pull trigger. Okay? So, yes, things were bearish. We were below end of day. We were rejecting supply up in pre-market. But we got the moving average cross and we got a beautiful red bar ignored, right? Beautiful bounce off open print. Todd actually hopped in this trade. I think it was on like the 940 candle. Correct me if I'm wrong, Todd. But this was a beautiful. He hopped in very early, and he was able to spot buyers showing strength. So shout out to you, Todd. That was a phenomenal entry. I did not get in right there. I stayed a little patient and waited for the next entry. So I was able to capitalize on a move right here, and I know it's only one candle, but this one candle, I entered long right here and was able to capture $1.50, almost $1.50 move to the upside, where I was able to exit this trade because we got very extended from the 9D EMA, right? And this is the thing. Anytime you get $1.50 move in a 5-minute candle, you got to be ready for a pullback, right? Now, when I trade SPX 0 days, I got to ask myself, do I want to take the 40% win, or do I want to wait till target gets hit? Now, once again, we need to manage our winners and losers. That doesn't mean you have to hold until the target, but what it does mean is you have to lock in your risk-reward ratio, right? So if and when I'm up over 45% on a trade, and if I'm only trading one contract, I'm locking that in, right? That's a profitable equation, especially with the amount of wins and losses that we got. So what I really want to mention here is there's nothing to prove to anybody. There's no right or wrong answer. You need to be able to gauge price action and know, hey, you know what? I'm good with taking profits here. Or you need to hold the trade longer. If you don't hold trades longer than 20%, then maybe you should work on holding, right? Everyone has their own personalized wall that they need to get down, right? So if I'm taking profits after 5 minutes, that doesn't necessarily mean just on this trade. That doesn't mean it's done on every trade, right? I just really want to throw that out there. I don't want to give the wrong impression. But on this day, I did take that long and I got out. And the reason why I did get out when I did is because we were getting very extended from the 9 double exponential, right? And then price actually comes back down, tags, what is this? This is, and guys, this right here is the beauty of the red bar and green bar that gets ignored off the open. Okay, so when you get a RBI or GBI off the open, you got to think, right? Why do we watch the open? We watch the open because the volume. Why do we watch the volume? We watch the volume because the volume shows us what the banks are doing. Why do we watch the banks? We watch the banks because we rely on price action to move. We can't move the price, right? Price action moves according to bank behavior. So we watch open print, end of day, PDL, PDH, because this is where there's higher amounts of volume. So when you see an RBI or a GBI next to open print, end of day, PDH, guys, you have to watch it, okay? Because this is where the banks are making their decisions. So if a buyer shows up here and then price comes back down to this level, be a little patient before taking that short play. Also, notice the gap here between price and the 9, right? We got literally, what is this, about 70 cents here, a pocket. What do pockets mean? Pocket means pullback every single time. Okay? So if I'm getting a pocket between price and that 9, that means I'm not getting in short. I'm staying patient. And if anything, I'm more leaning towards the call side. And that's what we got, right? Buyer showed up. Another red bar ignored. We took that one long and captured another good move to the upside. So Tuesday was beautiful. I mean, it was beautiful. It shows the power of our 3-step approach in that if and when you just follow it, you got 2 great opportunities here where if you execute accordingly, you're going to do just fine. It was a really cool, really good day. And I also want to point out here just how it literally showed up for the 3rd time over here at the 125 candle. Once again, powerful bounce off end of day. A beautiful red bar here that ends up getting smoked. And then that very strong move to the upside. I did not get that. But I think I seen members catching that. That was beautiful. I'm pretty sure there was a 2-minute 20 bounce in that one as well here. So hold on one second. Let me just... Oh, we got plenty of time. Okay, cool. Yeah, Tuesday was a really cool day. Look at this. Look at this on the 2-minute rally. The 2-minute cloud is extremely effective. You just need to know when to use it. You don't use it all the time, right? But like if you're struggling with holding trades, there's nothing wrong with watching the 2-minute cloud, right? It's going to keep you high and tight. It's going to keep you on the right side of the trend. Etc. And I think it's just really cool how we actually rallied right up into 55543, which was break and retest on a larger time frame, right? So if I just pull that out, because once again, this is how the market communicates to us over and over, right? So really cool day right there. Let's see here. Wednesday was flawless. I was so... all right, so there's some things I want to talk about with Wednesday. Wednesday was phenomenal, right? Let's break it down. So, real quick, let me get rid of all the lines that don't need to be there because I don't want any more confusion that doesn't need to be there. And I'm going to make this chart... actually, I'm going to pull up the 1 hour on this chart so I can show you what was going through my mind, why I didn't short the morning, etc. Okay, so here's the 1 hour time frame on the right hand side. Okay, so I've been making a lot of content about moving average concepts and principles, and this is gonna really show us that. Hold on, let me just make sure everything's aligned right here. We're talking about 430. Okay, perfect. Let me just get rid of this line. Okay, and then we got this level. Okay, we don't really need it. Okay, so once again, we have a 3-step approach and we have 3 jobs as a trader. 3 jobs. Number 1 is identify opportunity. Number 2, execute on that opportunity. So my approach goes something like this. Open print, moving average cross, RBI, GBI, right? When and if I see those 3, I get into a trade. So Wednesday, we're getting very strong selling in pre-market. Okay. Price sells off very quickly in the morning. Now, I'm watching the 1 hour time frame because we're getting very extended, right? I think we got, what is this, like a $7 move in the first 30 minutes, right? That's very bearish. But I'm getting no moving average cross. So sometimes we'll see this in front of us and go, okay, I'm going to hop in this short, right? You don't want to miss it. Maybe you're getting a little FOMO. There's nothing wrong with that. But you have to watch the 1 hour time frame. So you guys see the horizontal line on the left-hand side, right? That's the 1 hour 9. So we're getting very extended from that 9. Now, the moving average principle states that price is going to revert back to the moving average, okay? Or it's going to chop around and wait for the moving average to catch up, right? That's just how principles tend to work. So when I'm $8 away from the 1 hour 9, I am going to avoid continuations, okay? And there's no moving average cross. So therefore, there's no trade for me in the morning. And it's really just that simple. There's no trade until price either comes back to the moving average or the moving average comes back down, right? This isn't enough information for me to define an edge, so I don't take a move. I stay patient, And I watched that 1 hour, and I'm like, okay, we're very extended here. Let's see what happens if buyers show strength. And that's what happened. Buyers end up showing strength, pushing, pushing, pushing. Now remember, guys, there's still no move for me. Like, all this price action, I'm not trading. And I'm not saying that if anyone took that long, they're wrong. It's not about being right or wrong. There's no right or wrong in trading. There's only creativity. And there's only execution on your strategy, okay? So if you can define a strategy here that's repeatable, take it. But that never worked for me, right? That wouldn't work for me consistently. I would find myself maybe making some money quickly, and then down the road, not being able to repeat my approach. So therefore, I watch this price action. There's no move for me. I'm patient until we get this, okay? So we have open print, we have moving average cross, and now we're getting a red bar ignored. And yes, we are below the open. So what helped me get into this trade? Well, number one is I got a clear spot to stomp out when I get in. So I'm more focused on risk. Number two is the previous day low is all the way up here at 548.60. So in my mind, I'm going, okay, I'm going to go long here. My first target will be open print. That's still a dollar move. I'm okay with that. And then if and when we get strength, I'll target PDL. More importantly, guys, my edge presented itself. There's nothing else really to think about. I also like the market structure that we were getting off pre-market low. I thought this was very bullish, right? We got that inverse head and shoulders. We got the moving average cross, red bar, boom, ignored, done, in it. Now, every time I enter a trade, what I'll do is highlight the candle I got in, right? That previous candle that gets ignored. That right there becomes my stop loss every time, right? So there's never a point in time where I don't know where to get out, right? If I size up tomorrow, I will know exactly where to get out of my trade. If I, show up to the market late, if I don't do a pre-market plan, I always know where to get out of my trade. It's always based off the previous candle, right? We got a 1 bar stop. This is highly effective in terms of long-term consistency, right? Even if your win ratio is low, if you manage this sort of risk, it gives you a much better chance, right? Now, we're in very volatile market conditions. This 1 5-minute candle is probably $1, right? And it is. It's actually exactly $1. So that's perfect for me. I enter long. And you can see, just look at this, guys. If we can learn to really watch this, it really helps me hold on to trades much longer, right? And what I'm talking about is when I highlight the candle I get in, I just watch to see how buyers, in this case, react to price retesting it, right? We come in, we retest it. We suck up. Boom. We close above the 9 on this candle. Then we get a lot of volume coming to the market, right? Look at this crazy candle. The range on this candle is $1.76, but we hold through it. Why? Because my hard stop's below it. We're holding the cloud. We got one more thing I want to point out here to why I actually entered it was look at the healthy trend. There's no extension. Price is literally the body of the candles on the 9. This is very healthy. This is what we want to see. This is what helps me understand a continuation is highly probable. Okay? So when I see this, I'm willing to put my money, buy calls when I see this in front of me, right? It's very important that we program our minds to understand what opportunity actually looks like. This is what opportunity looks like, right? We got the moving average cross, red bar, ignored. We're closing on the 9, okay? And then look, it blows my mind at how well buyers really held that zone there. And we got that really, really nice push. I ended up getting out of this trade right here on the 11:20 candle, capturing a really nice move here. And it really felt really good. Was it uncomfortable? You're damn right. It was extremely uncomfortable. I was literally longing into open print. But at the end of the day, that was exactly that's my strategy, right? It doesn't matter when I see that there's an 82% chance I make money. That's it, right? I always tell everybody I mentor, like all my clients, when we see that 3-step approach, I want you to think of playing blackjack and you just got a 19, okay? You just got a 19. You got a face card and a 9. You have to bet on it, right? You're not going to fold on a 19. You put money on a 19, right? A 19 has a pretty good chance of winning. It's not perfect. I want you to look at this chart pattern the exact same way, right? When we see it, we got a very good chance of making money. So yeah, that was Wednesday. Wednesday was really good. Thursday was a smoke show as well. Really good trade here off with our 3-step approach. We got open print. Sellers just aren't showing strength. They're trying, but there's no market structure here. There's no reason for me to get in any of this. There's no moving average cross. And there's no clear RBI or GBI, so I'm not doing anything. And then buyers finally show some strength. Cool. And now I longed right here, okay? I want to show you guys why. Well, obviously, because my strategy presented itself. But there's something I want to show you that's going to really serve you well. So, this is what it looked like. Blueprint. I got SPY over here on the 1 hour. Now, if I pull out the 1 hour time frame, you'll notice we have a very healthy trend going on right here. Okay? There's the body of the candle is on the moving average, okay? On the 1 hour. Now look where the 1 hour 9 is. Right at 56169. So when I see our strategy present itself, yeah, we're far away from open print. Josh, it's kind of far. It is. But it's not far from the 1 hour 9. So think of this trend right here, this 5-minute trend, right? Let me highlight it. Oh, God. I want you guys to look at this trend, and I want you guys to look at this trend. Oh, it's not letting me. The exact same, okay? This trend, it's the same pattern, right? 3-bar play. See these 3 candles right here? Right? You guys see these 3? Look at these 3. The exact same. So once again, time frame doesn't matter. What matters? The principle. Okay? A principle we can expect when we see a pattern. We can expect. It's not 100% guarantee, but when we see specific patterns, we can expect specific outcomes. Okay? Now, this is a 3-bar play on a 5-minute, and what happened? We continued. So when we see a 3-bar play on the 1 hour, it's literally the exact same. We can expect a continuation. Okay? So these are just little tips. These are things that I notice that help me stay in my positions longer. Right? These are things I've picked up trading on demand, obviously, and just logging for the last 5 years. You start to understand, hey, when we see healthy trends like this and we see 3-bar plays on larger time frames, we can expect price to continue, right? There's a higher probability that it's going to continue. And it did. It continued, and then price ended up reversing, right? So now, let me show you this. So we caught that long right there. And then we caught a nice little short play right here. I'm going to show it to you on SPX, though, because I traded SPX and I got out where I got out because the 50 EMA on SPX. So this was Thursday. This was SPX price right here. Okay. So we went short. Hold on. So we took that long right here. Cool. And then we captured a really quick short play right here. Now, once again, just understanding, hey, we sold off very strong. We came back into the cloud. We got a strong rejection here. And actually, I was able to spot on the 2 minute, right? I was watching the 5 and the 2, but I was able to spot right here. Hold on. The pit numbers make price action very small when you use this indicator. You can see here how price on the 2 minute came back into a previous candle right here, right? So price was selling off. We came back into this level. And then we got strong selling. And then we got a green bar here. Ignored. Boom. Entered short. Captured a nice scalp right here. 4 minute trade. Nothing crazy. Into SPX's 50 on the 5 minute. Right? So just playing moving averages. Playing right here. Right? This nice little boop. But using our criteria to get into the trade. Now, all new traders or members, be careful using the 2 minute. The 2 minute is like the miter saw in your basement, okay? It's extremely effective. But if you don't know how to use it properly, you're gonna cut your hand off, right? Like the 2 minute is a phenomenal, amazing way to spot great opportunity. But I really only recommend it to traders that have already seen consistent results on the 5 minute. Because when you use the 2 minute, it's very hard, in my opinion, to differentiate choppy market conditions from trending market conditions. You're going to get tons of RBIs and GBIs. You're going to get tons of moving average crosses. But I just highly recommend that you use the 5 as well to understand the momentum of the market, etc. Right? Like, yeah, I did use the 2 minute on Thursday, but that doesn't mean come Monday morning you just start executing on the 2 minute, right? Just you just be a little bit more aware that the 2 minute isn't gonna paint the overall dominant trend as well as the 5 is. Okay, so I just wanted to throw that out there because the 2 minute is very good. I just highly recommend that you study it, that you train yourself on it, right? Like you're gonna see members on the team executing the 2 minute, right? Veteran traders, right? They're really good traders. They've been using these tools for a long time. So, I just want to make sure everybody's aware the 2 minute is very good, but just study it, right? Don't just go live on it come Monday. You study it, right? Put a lot of work and learn to understand it because it can hurt you. And then Friday, right? Let's break down Friday's trade. Friday was a beautiful trade. I was very thankful with how this trade played out. And once again, if you guys were there, you knew the morning was very choppy. SPY wasn't really giving me what I was looking for. And that's okay. That's going to happen. As a matter of fact, it happens 12% of the time. So our expectations are in check, right? Like we know, hey, out of 21 trading days, our edge shows up around 19. Okay, so that leaves us with 2 or 3 days where it's not going to show up. So we got to be ready for that. And when that happens, I like to trade Tesla. A lot of traders like NVIDIA or whatever. It doesn't matter. But so we're being patient. Price sold off very quickly into end of day and open print. We were getting very extended from the 1 hour time frame, right? If this is the 1 hour, right here, we're about $5 away from it. So once again, I got to be careful with shorts. We're coming into end of day. And then we get a beautiful red bar here that was ignored. And I did not take it. I did not take that long. The main reason I didn't take that long is because I didn't like SPY's price action. But guys, that's emotional trading. I didn't like SPY's price action, so I didn't trade Tesla. That's kind of sounds retarded, right? Like, once again, nobody's perfect, right? We're going to make mistakes. My goal is to get away from emotion and focus more on rational, right? Logic. Hey, did my edge present itself? Yes, right? But did we let that little mishap ruin our whole day? No. We said, what's the best move on the chessboard? I'll wait for the next opportunity, right? And that's exactly what we did. I was like, okay, if I could get a solid red bar to be ignored here off open print, I'm in long. And that's what we did. We captured a beautiful move all the way up here to PDH, right? So I was really proud of this trade for a couple reasons. Number one was the execution